Hello, good weekend to all. It's Adil bringing you a analysis or intermarket analysis of the US markets weekend version for Monday's trading 23rd of February 2015. Okay, so I have done my analysis on the European market. So for those of you that are interested in fundamentals, please observe and watch, and you're more than welcome to have a look at my perspective with regards to the Grexit talk, etc. In reality, does the Grexit talk affect US markets? It's a poxy little country, and yes, it has a bearing on the European Union, but does it really affect the US markets? One could argue certainly not, and it's just noise, okay? And you should really be focusing on the US economy and as to what's happening there. Now, in terms of focusing on the US economy, it basically is dictated by the FOMC minutes, and the FOMC minutes, as we all know, had a dovish stance. Although the markets failed to rally on the day, which is quite strange, although it has happened once or twice before, where the markets digest obviously the downside from Grexit concerns, etc., and certainly seems to be stopping the short squeeze until eventually the market participants obviously bought into any weakness and pushed and forced the markets higher. The biotechs made new highs. The semicons are making new highs now. So if you look at the U.S. markets from an impartial perspective, or impartial view or understanding, taking the FOMC minutes out of the equation, or even with regards to Miss Yellen's testimony out of the equation, one would certainly argue bull, bull, bull. Although the economic data itself, as of late, isn't exactly confirming that or suggesting that. Certainly is adding weight to the argument that the Fed will obviously keep back the interest rates and push them further back, and will not be raising them anytime soon, and obviously kept the patience languid as well. So let's just look at the economic data out of the US, and let's just see exactly whether or not this was bullish or bearish. Now let's just start with the Friday. The economic data on Friday wasn't exactly spectacular. Let's just bring this up. Bear with me. Just allow this to load. Don't tell me it's frozen on me. Yep, seems to have frozen. Right. Okay, 1 second. Right, let me get rid of this. Okay, let's have a look here this week. Okay, so basically let's have a look at the economic data and let's try and sum this up from a fundamental perspective. Okay, so the economic data that came out of the US was manufacturing PMI. That came out slightly better than expected overall towards the afternoon. Other than that, we didn't really have any of the economic data out of the US on Friday, although there was some news flow which isn't showing up on here. Bear with me 1 second. This one isn't the one that I need. Let me just go to this one. Okie dokie. Right, yeah, okay, that's correct. Okay, so all we had was really the market PMI 54.3, so slightly better than expected, so certainly give it respect there. Okay, the retail sales out of the UK came out worse than expected. That's one of the reasons why I was obviously attempting to short the market late on the FTSE around the 6950 region, late in towards the US session close. Okay, and obviously the data out of Europe was mixed as well, although Italian retail sales were spectacular. If I go back to the US data and focus on that only, jobless claims themselves came in slightly better than expected. Continuous jobless claims, so the employment picture certainly seems to be okay, although the continuous jobless claims did rise. Okay, we had the leading indicators coming out worse than expected, and then we had the Philly data coming out worse than expected. It came in half the projected figure, so again that's not exactly bullish. Okay, we go back to Wednesday. Okay, so the Red Book index itself came out slightly better than expected. Okay, the producer prices came out weaker than expected, so again that's certainly something to take into account given the fact that the Fed is focusing on inflation. And then obviously the FOMC minutes. Okay, so from my perspective, overall, the economic data out of the US was slightly negative, so no real impetus for the markets to propel and move higher. The only obviously focus would be on Fed policy, which means that interest rates are going to be pushed backwards, and the talk of uh, of being patient maintains and resumes the normalcy there. So therefore, one could argue that's the central bank put still being in place, given the fact that interest rates are going to be pushed backwards. The Fed obviously is focusing on international development, so i.e. reference to Greece, and therefore obviously has to have a dovish bias because they don't want the markets from selling off. Now that the Greeks have obviously signed an accord where they have a 4-month extension and the uncertainty has been lifted to a certain extent, not to a large extent, it'll be very interesting to see what Miss Yellen's testimony is this week. I personally think that she is, although the patient argument is there, she will try and spin the web the way, or try to explain herself positioned in a hawkish manner. No matter what she does, she will have to be perceived as being hawkish. Okay, she can't afford to maintain the dovish stance given the wide contrasting views amongst the Fed members, especially Mr. Bullard and others as well. Okay, so I think she has to toe that line, otherwise it's going to be a credibility issue for her. Okay, whether or not that's bullish or bearish, so that's going to be interesting. But from my perspective, whatever she states, I think the markets will interpret it that it will be hawkish, and that's basically what we're focusing on. Okay, right, so technically, let's have a look at the market technically. The S&P 500, no argument there, we're breaking out to new highs. Look at a daily chart, certainly looking bullish. One would argue the next stop is going to be 2140. Okay, there's no other way of explaining this. Anybody who attempts to say that they want to go short, just looking at a purely technical basis, has to be out of the mind. Okay, the only way you can argue a short on this chart is obviously looking at it from a fundamental and intermarket analysis perspective. 60-minute chart certainly looks as if the market wants to blast and break higher. We did have a fake out here, so obviously a lot of individuals bought the market, stopped out, then obviously the market made new highs. Welcome to the stock market. Okay, so that's basically what you're looking for. I mean, this is why TA doesn't work. I mean, if you take a 60-minute chart, look at this. So all these TA junkies out there, market's bullish, market's going higher. Yes, mate, yes, mate, yes, mate. Let's buy this market. Blah 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 blah. We've broken out, etc., etc., etc. Whoops, a daisy, the market's gone a little bit low. So basically, it's stopped everybody out now. Everybody wants to go bearish engulfing candle. Yes, technically this market wants to go lower. Everybody attempt to short this market because we have a H&S formation, left shoulder here, head double top here, bearish engulfing candle, inside bar, and we go lower given the Greece situation, etc., etc., etc. You have a H&S target of 2100. We failed to go above. We stopped out just above at 21.8. That was a stop loss hunting exercise given the fact that we took out the last high. Everybody's been stopped out now. The market makers want to move the market lower, etc., etc., etc. 2100 is the head. Your neck is at 2085. You're looking for a 15-point drop, and we are looking for this level up here. Okay, at 2070, because that's the H&S target. What happens? Market short squeezes to new highs. Can you see why TA is absolutely, I wouldn't say pointless, or basically is it gives you a false sense of security basically. Okay, this is why it's so important for you to understand intermarket analysis. Very very important, number one, and number two, understand fundamentals. The reason why that H&S failed was because of the resolution with regards to Greece. Full stop. Nothing else. Technical analysis would never have taught you that, and will never teach you that. Okay, it's very very important that you learn fundamentals. Using when I went to the STA meeting and we had Clive Lambert giving a lecture, okay, and he was talking about market profile, to which I learnt market profile from a teacher in Wales. Okay, he has a book called Trading for Wealth. Certainly read that. It discusses the concept of market profile and how it can be used, etc., etc. And like Elliott Wave, it's a very subjective science. So like even like TA, it's a very subjective science. And again, I mean, you could. It's open to multiple interpretation. It's open to multiple interpretations. So let's see if I can find this book. Okay, I'll see if I can find this book later on for you, and I'll put the link on my recommended reading section for those that you that are interested in market profile. Okay, so how can I explain this? So technically, what an individual would have been absolutely whipsawed here. Okay, whipsaw. Look at this. Market breaks up, puts in a double top, breaks out to new highs, consolidates, knocks out all the stocks below those that went long. Then all of a sudden, short squeezes to new highs late Friday. Okay, so it's very important for you to understand fundamentals and obviously amalgamate them with technicals and into market analysis. And the only reason why that market failed the H&S formation is because of the fact that, number one, we had the FOMC minutes. So anybody who wants to obviously short the market based on the FOMC minutes being dovish and keep maintaining their patient stance obviously needs to get their head checked. It's very important not to fight central banks and certainly going for a health check. Okay, and from a technical perspective, yes, I mean, if you rely just on technicals and that's all you have, like Mr. Lambert said that he stated when I asked him with regards to his market profile theory where he contradicted himself, I asked him, what about Greece news? You not take into account Greece news in order to obviously maintain or supplement your analysis or complement your analysis. So, and his answer to me was he is not intelligent to interpret economic news events. Okay, this is why technical analysis is a good excuse for the ignorant. Okay, don't be ignorant, educate yourself. Okay, educate yourself in fundamentals, basic fundamentals, and learn to interpret whether they are risk on or risk off. Okay, it's very easy to use technicals and state that you're ignorant and oblivious to the markets, and the markets are all noise and so on and so forth. And yes, that argument can work to a certain extent this week when you had statements and then counter statements and contradictions, etc., galore. Okay, but that's not the case all the time. I mean, just because 1% or 5% of the market has noise and has a misunderstanding in terms of economic data. So, for example, if US data comes out, that's considered positive in terms of more QE, and the markets move higher based on negative data. Okay. But once you learn that, then you know that's the thought process of the market, and then you can adjust accordingly. You can't just keep stating, oh, just because I don't understand the concept of QE and I'm not going to make the effort of learning fundamentals and understand the terms and the phraseology, etc., that I'm just going to stick to TA and it's easy being lazy, and I don't have the time to read and understand and educate myself enough. So I'll just use TA and I'll just use market profile. I'll use a few moving averages and justify taking my trade. It's the easy way of doing it, and I'm too lazy. Okay, that's not the case, I'm afraid. You should always, as a trader, we're always constantly learning, constantly educating ourselves and improving ourselves. So it's very important that you, okay, once you have mastered technical analysis, there's nothing wrong with you mastering fundamental analysis. There's nothing wrong with you mastering intermarket analysis. Always keep yourself open-minded to every potential scenario in the markets. And if you're going to do that, then you should keep yourself open to every potential research or educational tool out there that can improve your understanding of the markets. And from my understanding, because I'm obviously, when I did my economics degree, I was very immersed in fundamentals and I was oblivious to technicals. And if I'd remained narrow-minded and obviously remained obsessed with fundamentals and called technicals voodoo and witch doctors and etc., so on and so forth, then I would never have learnt technical analysis. I would never have learnt applied technical analysis. So it's always important for you to remain open-minded. Okay, so don't go into that warp mentality, because it's like an individual looking with one eye. That's what you are. You're just a one-eyed monster, and hence the reason why you don't understand and don't appreciate the market moves. Okay, and it's easy to get especially when an ignorant person is very easy to become frustrated, impatient, irrational, illogical. Okay, which eventually leads to either excessive trading or excessive leverage or revenge trading. Eventually becomes an emotional wreck, and these are characteristics of a good trader. So ignorance does that to you, so you should educate yourself and empower yourself, and that's what I try to do on the live analysis service. I try to give entry and exit and give the reasoning behind the trade from a fundamental and a technical perspective, and obviously I accompany that and I filter that via intermarket analysis. So I teach you via real time with live entry, live exit, etc., etc. Okay, and for those that obviously can't pay £50 a month to join the live analysis service, I offer my fundamental swing trading service for free. Okay, so I'm trying to help all. Okay, and trying to educate, empower, and give my bit back to society. Okay, right. Going back to the S&P 500. Okay, so HNS, obviously, as we all know in technical analysis, Nicholas and Gareth Santiago at NinjaMoneyStocks.com, who taught me my technical analysis. And those of you that are interested, I'd encourage you to learn from them. Their courses are very good and very informative. They are skilled at what they do, and I think they have their courses every 3 months or every month. So certainly, this is the actual website, InTheMoneyStocks.com. So learn your TA from there. Or alternatively, you could take my mentoring program, and then we can go over the technical analysis side of things with you as well. Okay, so the actual S&P 500, going back to that, the reason why the market's moved higher is when you have a failed pattern in technical analysis, it creates an emotive move in the opposite direction. So all those traders that were obviously looking for a short position now, given the fact that you had a HNS formation, double top resistance at 2101, bearish engulfing candle inside, bar down we go, and the HNS target being 2075, which is the previous resistance equals support, obviously were stopped out. Once they were stopped out, it created a short squeeze and markets continue to move higher based on obviously the Greece deal and the euphoria regarding that as well. Okay, so that's basically the interpretation. I have the ability to understand every single market move. Okay, yes, sometimes a market can be irrational, illogical. That happens 5-10% of the time. That doesn't mean that you throw the baby out with the bathwater and now call the market noise. Can you see the extreme that people go to just to justify their position? Just because the market's irrational 5% or 10% of the time doesn't mean that you throw the baby out with the bathwater and claim that all fundamentals or all news flow is now illogical, irrational, and doesn't justify or explain the market moves. I'm sorry, that's incorrect. If I can do it, I can sit here and explain every single market move, whether it means instantaneously that very moment in time, or say 60 minutes or 90 minutes or a day later, because there's certain news flow that I'm not privy to. I still have the ability to explain every market move, and I'm open to that challenge. Anybody who wants to challenge me and say to me, you don't understand this, you don't understand this, I'm more than happy to explain every market move, whether it means that it might take me a day or two, or take me an hour or two after the market event. I still have the ability to explain that because I know all the variables, from risk FX to commodities to the bond market. It's very, very important. Commodities, indices, so everything's intertwined, interlinked. That's why we had people like Paul Tudor Jones that were very, very effective and very skilled at what they do. Okay, right. Going back to the S&P 500 then, so once we had a short squeeze, i.e. a failed HNS formation, we obviously have an emotive move in the opposite direction. That's exactly what we have. Okay, so where do we stand? So using TA from a 60-minute perspective, I'm using this trend line. Okay, so this is indicating to me now that we have a resistance level at the pivot S3 resistance at 2114. We have support here at 2086. Previous resistance equals support here at 2100, as we all know, and that's basically levels that what I will be working on based on come Monday. Obviously, the market continues past 2115 and it maintains a bullish stance, and we all know on the daily chart from the S&P perspective, one should be targeting 2140 in the upper channel resistance there. Okay, now let me just get this trend line correctly drawn here. 1 second. You got this upper trend line here. Okay, this is the important one. Okay, and then you have a mini one. Okay, inside here. So one could argue. Let me just draw this here. Sorry. So you have a mini one here. So 21. You have 21, 25, and then obviously you've got the upper one at 2150. So there's all. They are all your key levels on the upside. Okay. Then you have your daily chart. Nothing really from that perspective. On a daily chart perspective. Your 60-minute chart, obviously we know pivot S3 resistance. Let's go to our 10-minute chart on the S&P 500. I mean, we're in no man's land now, really. Everything is broken out from that perspective. The only thing, like I said, from a S&P 500 will be a 2101 level. That's the one that we'll be working from. You do have a trend line here that we'll be working on off as well, and this is basically where we are, and we're in that channel. So obviously once we break that channel, then an argument opens up to test the 2100 on the S&P 500. Now let's cross verify that with the Russell 2000, which you all know is the IWM, and that's the market that I always cross reference the S&P 500 move on. So if I just bring up the IWM, if I can find it, where's it gone? 3000 there, Russell 2000, here we go. Okay, so again, for those of you that are familiar with TA, you can see there we had a H&S formation that failed and the market's a short squeezed higher. 10-minute daily chart at this very moment in time, given the fact that you've got a trend line coming down from there, you've got resistance here around the 88 level and then 89 level. So that's basically the level that you're looking for. So therefore we still have a move higher. As you can see, this potential bottoming tail here, quite a powerful reversal. 60-minute chart on the IWM Russell. As you can see, the H&S formation has failed. When that happens, what happens? The market obviously short squeezes higher, moves in the opposite direction. So for now, all we can do is take the pivot highs, connect them together, and you're looking at potential resistance around that 89 level. Like I said, be open-minded though. You do have an unfilled gap below, which again, reason why I was looking for this H&S to close that gap. Obviously that wasn't the case, given the euphoria post-Greece deal. Okay, 10-minute chart, we are coming into resistance now on the IWM. So from a 10-minute perspective, as you know, watch out for that resistance zone there, and we'll see exactly how the market plays out. We already know that the resistance in the IWM should coincide with the resistance at 2115 on the S&P 500. Okay, so again, keep open-minded because you do have an unfilled gap below. And the next chart that we're going to look at is the Dow. Okay, the Dow itself, this is something that I highlighted in real time, and I'll discuss this in a second. So daily chart, obviously we've taken out the last pivot high, so very bullish. Again, we need to see confirmation now of this move higher continuing, but from a daily chart perspective, very bullish, especially with the uptick in volume as well. The 60-minute chart, again, very strong. This is a chart that I highlighted to everyone. So I highlighted the left shoulder, the head, then the bearish engulfing candle, right shoulder, market moving lower. The head was to 18,050, the neckline was 17,950. We're looking at 1850. We got a pivot low of 1877 before the market reversed higher, and you can see that clearly in the 10-minute chart. Beautiful H&S formation, beautiful. Okay, beautiful. And I played that on the downside on the FTSE because the FTSE and Dow generally tend to move together, and obviously we reverse and short squeeze powerfully going into the 18,120 level. And can you see once the H&S, I mean this didn't exactly hit the target, it more or less got near the target, but can you see once the neckline is negated, what happens? The markets have an emotive move in the opposite direction because the bears throw in the towel. Okay, basic technical analysis, and this isn't exactly rocket science. I mean, I'm not going to go into the argument again, but it's very important for you to understand fundamentals, folks. Very important, and you to know why this H&S has failed, not just the fact that it's failed and that's it. No, you need confirmation. I mean, what if the markets had, if you relied on TA alone and there was no Greek deal, the market pushed here, do you think the market will continue here? No, it wouldn't continue higher because there's no fundamental catalyst for it to go higher. Even though it's negated the H&S, one would argue that you connect your trend line together, we're into this resistance level, therefore down we go. So you would ignore your H&S formation and just play lower lows and lower highs. Okay, but if you have a Greek deal, then obviously that's a totally different situation, and that provides you the fundamental catalyst for the market to short squeeze higher. Okay, right, so that's the Dow. Again, new highs, 10-minute chart looking very bullish, although it is looking very exhausted now from a short-term perspective. So let's corroborate that news with regards to Dow Transports. Now the Dow Transports, I am a bit surprised, and I do think they are lacking. So again, in order for the Dow to move higher, you need, given the fact that you failed to take out the topping tail. Okay, so my perspective on the Dow, not the S&P 500 by the way, but my perspective and my view on the Dow is that it's bearish. Why is it bearish? Because we failed to take out the topping tail on the day previous. So when the Dow Transports fails to take out the topping tail on the day previous, when all every other market's obviously short squeezing to new highs, especially Europe, that's not exactly a positive sign. Okay, so that generally signals, identifies to you that we are looking for a potential reversal here. okay, especially on the Dow. And if you're looking for a reversal in the Dow, that generally means you're looking for a reversal on the FTSE 100 as well. So just bear that in mind. And as you can see, if you look at your trend lines here, let me just get rid of this one. We obviously bang into that trend line. So all I've done is taking the pivot high from here, taking the pivot high here, and the the Dow transports, as you can see, are into resistance. And that's your benchmark now, folks. Okay, so going into Monday, that's your benchmark. This is something that's going to be very, very crucial for me. If the market fails to take out this pivot high here, okay, therefore the US markets are going down, full stop, period. That's my perspective. Okay, if we take out this high, then yeah, S&P 500 is certainly moving higher, and we're thrusting higher. So that's my rule of thumb. That's basically my interpretation of risk on, risk off. That pivot top high there. We fail to take that out, down we go. We take that out, up we go. Full stop. Dow transports are a leader, and they must lead, not lag. Okay, so to bear that in mind, very, very important. Also with regards to the Russell as well, given the fact that the S&P 500 has pushed to a new high, the Russell is lagging. That's not a positive sign. So again, take that into consideration, especially with the oil price moving lower as well. Okay, so let's look at the next chart, which is the Nasdaq. Nasdaq, stellar run, social media craze, Snapchat. Call it basically the Snapchat craze, basically. Ridiculous valuations, social media craze, etc. Obviously, markets continuing higher. Price action is price action. You can't argue against it. 60-minute chart thrust up higher on good volume. Daily chart obviously breaking out. 10-minute chart looks slightly exhausted here now as we come into pivot S3 resistance. So we'll see exactly where this market pauses. Okay, looking for a a bearish catalyst. Okay, and looking at a rising contracting wedge pattern. So again, that doesn't exactly bode well going forward. The semicons have pushed ahead higher, but we need confirmation, and the biotechs obviously have moved higher as well. So overall bullish. You have to give it the respect it deserves from a price action perspective, but again, it must be confirmed from the actual fundamental perspective as well. Okay, folks, that's my call. I must dash now. I have circuit trading at 10 AM. I need to get ready and make a move. So risk on, risk off, wax on, wax